Louise Bedford here, the host of the Talking Trading podcast. This is how traders excel. Now, I'm going to drop you this week right into a conversation that I had with Con Koutsikas. Now, Con is the podcast host of A Cuppa with the Conversationalist. Now, he is definitely somebody who does not have a trading background, which makes it absolutely perfect for beginner traders looking to get started in the markets and perhaps putting aside some of those questions and nagging doubts that they've been experiencing that have been holding them up before getting going as a trader. So let's cut right over to Con now, and you can listen to the interview that I had on his podcast.
Welcome to another episode of A Cuppa with a Conversationalist. My name is Con and I am the Conversationalist. And yes, as always, I have my latte in tow. Today, we're going to be talking finance and in particular, the stock market. My guest on today's program is one of Australia's most compelling speakers on the share market and a best-selling author of 6 books on investing and trading. Louise Bedford has been trading the market since 1990 and has trained thousands of people to maximize their own trading potential. Louise is a behavioral finance expert, and we'll ask her more about that, has a degree in psychology and business. Louise is known as the corporate executive who lost the use of her arms and achieved financial freedom by trading with a pen in her mouth. Louise inspires people to achieve their best trading. Her presentations are not only about vague concepts that don't work in the real world, they're about incredibly practical, time-saving strategies that you need to implement in order to become an extremely successful trader. Her key areas of focus are using candlestick charts, trading psychology, pattern detection, the impact of neuropsychology on trading decisions, and trading crisis management. Officially crowned as Australia's candlestick queen, she's known as the trader that brought this fascinating technique to Australia. And she's been running the 6-month repeat for free mentor program since 2000, and also the founder of her talkingtrading.com.au, a free weekly trading podcast. Welcome, Louise Bedford.
My goodness, Con, what a lovely introduction. Thank you so much.
Louise, thank you so much for your time and for sharing your expertise with our audience. Look, my first question is, tell us a little bit, what is a behavioral finance expert?
Yeah, look, this is such a cool field to belong to because I've got a background with psychology and a background with business. And years ago when I started trading, the thing that really got me going and made me think I really want to be involved in this field is, what does our brain do to our decisions about finance, about money, about the stocks that we trade, about the timeframes that we trade? So being able to combine those two areas, my love of money and my love of psychology, has just been so much fun. So I've been trading since 1990 and looking at my friends learn to trade and later my clients learn to trade, and some of the biases that they go through and some of the self-talk that they denigrate themselves with while they're learning, or even if they take a loss or too big of a profit. It is just fascinating to me, and it has been my passion for the last 3 decades.
Wow. Speaking of that, look, let's go back a little bit, and I'm curious, and as I'm sure my listeners and viewers are, how did you're a corporate executive, how did you get into it? And I know there's a story that is just going to flow on. You lost the use of your arms. Please share if you don't mind.
Yes. So look, years and years ago, I started working for an American multinational. I rose up the corporate ladder, and it was so exciting because that's what I wanted. I wanted control over my own life, and I wanted the ability to travel and eventually become a mother, and to be able to have that power and status and money and the company car and the flashy rings and all of the trappings of that typical idea in the 90s that we had, that everything was just going to be sparklingly capitalist. So that's what I wanted.
Show me the money.
Yes, absolutely. Greed is good and all that jazz. So I worked myself into a complete state of oblivion. And then way back when, I had a little bit of a problem with one of my fingers and it stopped coordinating. And I thought, oh, I can't even properly move it. But as we do, we ignore these things and we just move on. Now, I'm not saying what happened to me is the worst possible thing, because I know there are people listening who will have far worse circumstances and they're dealing with things currently that have been horrible, horrible for them. So please, let's put it all into context.
Sure.
But over the next 2 weeks, after noticing that I couldn't move that finger, this pain and sensation of needles and a revolting electrical shock feeling spread up and down both arms, and I couldn't even move them. I had to have a carer to help me go to the bathroom. I brought somebody in to help me open doors so I could still get to work. And it was so terrifying and so, I guess, future threatening that I just felt like I was a caged animal. Now, I don't know where you've been at in your past, Con, but if you've ever had that feeling of claustrophobia where you can hardly breathe, that was what my life had become. And I eventually had to leave my beloved corporate job, which just ripped out my heart. But thank goodness I'd already learned how to trade. I already knew how to make money from the stock market. I've been trading already for quite a few years at that stage. And I became a full-time trader. So yes, baby, I was in business. I could go to all of my physiotherapy lessons, all of the therapy that I had to have from a neurological point of view, because there was a neurological difficulty with the brain signals getting through to my arms. And as you can see now, I can move again.
Yeah.
Hooray. So
Hooray.
lots of physical therapy, lots of strange things that they had to do to get me to move my arms again. And what a blessing we are in such a modern time that they can do an MRI and see exactly what the problem is. So that is really how I became a full-time trader.
So without dwelling on it, I'm curious, what was the problem? What was the diagnosis?
Yeah, well, it is a weird neurological situation. And I do remember at one stage, they'd just taken me out of the MRI and the nurse was saying, look, it's time to get ready to go. And I heard her talking behind the screen to a fellow nurse, and she said to the other nurse, she goes, it's amazing she can speak at all, right? So tuck that away in the long-term memory. So with this particular neurological situation is often in the body, the areas that are close together in the body, they call it, if they are close together, if they wire together, they fire together. So you'll notice how close my arms are to my throat, as in most new people. It's sort of the way it is. Eventually, I lost my voice as well, and I've only just recovered the ability to speak again. It took me around about 2 years to move my arms again, way back when, and it took me it's nearly 3 years actually. I wouldn't even call its full faculty with my voice yet. I'm doing speech therapy, and it is it is quite the trial. So I had 9 months where I couldn't make a noise at all, not even a hum. I had 2 years where I was able to eventually build up to being able to say a sentence, and I could speak for around 10 minutes. And it's taken a very long time to be able to have a conversation and to be able to feel that I'm part of the sound world again. It's peculiar, the things that happen when you can't speak.
And was there a reason behind this or
Yeah, it's that same neurological issue. So it is something that is focal dystonia or focal dysphonia. The dystonia was the dystonia with my hands and arms. The dysphonia is inability to speak. Muscle tension in the throat area, which compounded the situation, and the right side of my throat collapsed internally. So they rebuilt it with a clever little operation with injecting filler into the right side of my throat to prop it up, which took it away from the vocal folds, which allowed me to be able to make sound again. So then there was a variety of other aspects there, but basically in a nutshell, I can speak again and it feels fantastic.
Oh, I bet it does. Goodness gracious me. Well, there you go. There's some context for you folks. Okay, again, that's fascinating. Thank you for sharing, Louise. That's really important. Let's get on to the trading. And Con's going to play devil's advocate here.
Love
and
it.
Put on his little horns and tail. And it's been said that trading is pretty much like looking into a crystal ball. And we know that, in coaching of any aspects, we're told, that the past does not define the future. What's your response to that in terms of, we're looking into a crystal ball? How can you predict?
Yes. That word predict is interesting, isn't it? Because I actually agree with you. We cannot predict. All we can do is take high probability trades and then make sure that we shelter ourselves in some way. When do you get in? When do you get out? And how much money to put into each position? By adding that data and that evidence-based strategy around something that is a very ambiguous aspect. Is this thing going up, down, or sideways? We need to be able to scientifically define that. And we need the ability to be able to say, when are we wrong? And that's where a stop loss comes into place. So I will run these little shares through my checklist and make sure that they've got everything that I want in a share, almost like it would be marriage material if I'm looking for a spouse. I wanted to have everything that I want on that list. If it's missing something, then can I live with that? I'm not sure, So that's the aspect here. We are adding a scientific basis around something that produces an ambiguous result. And we're making sure we look after ourselves with things like a stop loss and position sizing, Con.
Okay. So in summary, we agree we can't predict the future.
Correct.
But looking at a number of critical aspects or key elements that you do, we're taking that information to help us forecast what potentially is an outcome.
Yes, yes, absolutely.
Okay.
And a lot of it comes down to using a written trading plan. So for everybody listening, if you don't have a trading plan and you are putting money into the markets, I can tell you now you are doing it wrong, because what you're doing is you are more akin to being a gambler than an actual technical analyst, where you're being scientific with your basis. And you need a trading plan to guide your actions. You can get one from my website, tradinggame.com.au. I'll give you my free trading plan template to help guide that decision-making process to create a trading plan that is robust and that you can rely on time and time again. So definitely download that trading plan template from tradinggame.com.au.
And for the listeners, rather than, we don't want you pulling out pens while you're driving and listening to this program, I'll have all the links to Louise's data and access points and notes and whatever all in the show notes, so you can get those at a later date. Louise, the Oracle of Omaha, good old Warren Buffett, famously had a profile fund manager $1 million that he could deliver a better return in 10 years by investing in a mutual fund than he could by trading. And it's no secret that Mr. Buffett won by a fair bit. In fact, the trader threw his hands up and paid him out early, I believe the story goes. Now, I actually made a comment off air, which you corrected me on, and thank you, because you're not day trading, you're a medium-term trader, yeah?
That's exactly right.
Yeah, and that's important for our listeners. We're not looking at, making a trade at 9 o'clock in the morning and then checking out at 3 in the afternoon and counting your millions. This is over a period of time. But what Mr. Buffett is saying is that investing in a mutual fund where there's not that element of risk over a longer period of time is always going to be far more successful or a better outcome. In relationship to what you do in terms of you're not a day trader, and I thank you for correcting me and for my benefit of the listeners, tell me about what's your period when you say medium term in relation to Warren Buffett when he's saying you got to play the long game, and 10 years, just put it in there, set and forget.
So there's a few aspects to this. Firstly, with the hedge fund manager. So what we're talking about here, just to define a hedge fund manager, is it's somebody controlling other people's money. Now, usually they're large volumes of money and they work to a mandate. That mandate says what they're allowed to invest in and what they're not. Because as a customer, as a client coming to that hedge fund manager, you have to sign that, yes, you understand that mandate. So one of the difficulties with hedge fund managers is because they're moving large volumes of money in and out of the markets, they can't be that sniper. They can't be fast on their feet and they can't react to market circumstances. They are held back by that mandate. And that is traditionally why retail individual traders like you and I, Con, we outperform hedge fund managers year after year after year. Many hedge fund managers don't even manage to get to the average rate of the prevailing index. So for us, the All Ords or the ASX 200, many hedge fund managers don't even manage to achieve that return. So it doesn't surprise me that he had trouble with that. Probably his ego was blown up at the same time. It would have been a horrifying circumstance to be able to have that bet, to think yourself superior and to not be able to react. But the other aspect of this is it's something that I think everybody should think about, because shares have inherent within them specific risk. So that little share, if you get a new CEO, or if perhaps they don't discover gold or they don't discover gas, what is happening is that particular share itself can be subject to many things going wrong, and that specific risk is a concern. I always suggest that people look at ways of mitigating that risk. And one of the easiest ways for everybody listening is to use an ETF, an exchange-traded fund. That is where it's more akin to an index trade. You're getting involved with something that's a compilation of a lot of different positions, and they have an upward bias. So as shares become duds, they get dropped out of that ETF. As new one comes on board that are effective, they get added, and that upward bias drags your money along with it. So I'm suggesting that for everybody listening, don't block yourself up to thinking that you have to put it all on black, because that attitude, that mentality is not something that's going to suit you long term. That specific risk is too dangerous just to have all of your money in one position. Spread it out over multiple shares. Find a way to mitigate your risk by looking at position sizing, and also consider having things that are more of like an index trade, like more akin to an index scenario. And that gives you a lot more potential to not only do well, but to also beat that prevailing index. That should be your benchmark. You should be aiming to get a better return than the All Ords, and to do that all in a part-time way, all working from home, all not having a boss breathe down your neck.
It's really interesting what you just said, and this has just dispelled one of my beliefs. I have no doubt that the listeners will be of the same view. I made the assumption that trading, whether it's medium term, short term, or whatever, is really focused on specific shares. And herein lies the issue, which you've just identified. The CEO changes. They don't find gas. They don't find gold. We, as the punter, we find out last, and by that time, it's way too late. Am I correct in my presumption then that your strategies and what you teach is also inclusive of exchange traded funds? So it's not just specific organizations or specific companies.
Absolutely. Okay. And the ability to set things like a guaranteed stop loss order, that is a place to exit that is guaranteed you will get out at that spot. So everything comes down. I mean, the fact that I've been a full-time trader since 1996, everything comes down to making sure you can look after the things that you can control, and the things that you can't control, you make sure that you can risk manage around them, because that is longevity in the markets. That is also lifestyle for yourself and your family. And it's a way of maintaining that steady source of extra money coming in that you don't have to earn through your hours at work.
This was something that I was going to ask later on, but I believe that it's more appropriate now. Is it fair to say that trading is not for the faint-hearted? In other words, if you have a high propensity for risk aversion, this isn't something that's going to suit you. Is that a fair call or not?
I would say trading without control is not for the faint-hearted. There is a saying called, there are no old, bold traders. Now, the people who are very bold get wiped out in the markets. That's why they don't have that longevity. So, do you know, interestingly, Con, women traditionally earn more money than the men. So we take longer to learn because we're more, apparently, according to the studies, more risk averse. However, that level of risk aversion translates beautifully into taking calculated risks. So we tend to make sure we have every I dotted and T crossed before we enter the markets. And that is exactly what I suggest everybody does, regardless of gender, that you have that specific written trading plan. You're working to that business plan. You don't deviate. This is just like a small business. So if you've already got background with a small business, or you've worked for a small business, you know you have to wear a lot of different hats.
Yeah, sure.
And you have to be very careful that you don't make missteps. So a lot of the drama around the markets is when people make a huge misstep in the wrong direction. So you can make a whole heap of tiny little missteps and it won't hurt you. The big misstep in the wrong direction is what we're trying to cover ourselves for. And that's where risk management comes into play.
Okay, good response. Can we look at, obviously, again, going from what you've told me about what you do and what I've read, there's fundamentally 4 key elements in your strategy, your teachings, and we've got your trading psychology, pattern detection, the impact and trading crisis management. Crisis management. Wow. We'll get to that one. Can we just, or can you, I guess, elaborate a little bit on each of those just to get a bit of an understanding of what it involves? So let's start with trading psychology.
So these are just my interest areas. They're not necessarily for everybody to have to become an expert in. These are just things that fascinate me. So the psychology part, actually, this is, for those of you watching on YouTube, you will see that I've just held up my brand new book, Investing Psychology Secrets. This is the very first off the print copy of my new book, Investing Psychology Secrets. Now, that has been the culmination of 2 years of effort. I started work on that when I couldn't speak because I thought, well, I can't speak, but I can write, so I need a project. And that was my project that I started when I was having a lot of difficulty with making sound. That psychology part of it is always going to be a love of mine. I just find humans to be so fascinating. The way we think, why we act the way we do, and what we do after we've made brilliant decisions or very poor decisions is something that is just wonderful. It's like the traders in my mentor program, they're like little mice that I can run through mazes. So in a loving, caring way, of course.
I just had this vision.
So
That's funny.
that is just a fantastic combination of my skills. Now, the next one was pattern detection. Yes. So pattern detection is the main thing I look at here is I'm looking at charts. So that is how price behaves over time in the stock market. So I'm looking at things like, say, the price of BHP, what's happened over time and what patterns repeat. What ways does that share respond to different things like, okay, it's been going sideways for 3 months, but it always does that at this time of year, for example. So that's the type of thing that really fascinates me as well. The candlestick charting method, which is a 300-year-old method from actually Japan, which, to go back to the home of where it began after I've written a book on it, has just been just wonderful to see. And looking at patterns with human behavior. Who is putting their money where their mouth is in the stock market? And what does that mean for the future? Can I profit from that? Yes.
And when you say who's putting money into the market, are you referring to in terms of volume, i.e., is it nickels and dimes, as I say, by Con and Louise and John, or is it large amounts, whether it's a hedge fund or somebody like that? Is that what you're looking at?
You're right. Volume is a very critical component because I personally have believed in a share beyond all doubt. That little baby is going to the moon, but if nobody else believes in it, that's not going to help because I'm not going to shift the market with my piddly little tiny amount of equity compared to the entire world market of equity. So it is definitely an aspect to have a look at, and that is part of pattern detection also.
I have an interest and a very, very low exposure to a little bit of crypto, and I do mean low. I'm talking hundreds. But I'm just fascinated, and I wasn't unique, but I was one of the people probably 7-8 years ago when Bitcoin was $1, and I'm going, this is something that you got to hang your hat on, and lo and behold, here we are. But where am I going with this? A lot of things that I see, there's people who are traders in crypto and on the surface seem to do well, but they talk about these candlesticks and they talk about that kind of thing. And I look at it and go, okay, I get what they're talking about in terms of the peaks and the troughs. In layman's terms, for the mugs like me, can you explain it a little bit? Because again, to me, and I'm playing devil's advocate here, it just looks like that happened then. What not what guarantees, but what legitimacy does it give to what's going to happen in the future?
We definitely are creatures of habit. I'll bet if you've been driving to work, you are going to be driving the same way almost 99% of the time.
Sure.
That habitual behavior can be read and understood. So that is what I'm looking for on a share chart. There are specific ways that people behave. If you can chart it, you can make money from it. And it can be applied to any market around the world, whether it be crypto, whether it be an individual share, whether it be an index. That human psychology being represented on a share chart is a beautiful thing to get your head around. And once you do, you can apply this anywhere. I've had all sorts of situations where I thought I was looking at a share chart. It wasn't a share chart at all. It was something completely different, but the same patterns of human psychology were at play and it became readable. The most significant one, I had these two guys come to me. This is before I realized that, oh, hang on, we're not talking about the share market at all. They'd bring hand-drawn charts and we'd have a little cuppa and we'd have a look at the charts and I'd say, okay, well, obviously this is going to happen because of this. And they'd go away, a big smile on their face and come back the next month and say, now what? Show us what this chart means. They were showing me charts of taxi licenses. I had no idea. I thought it was a share chart. No, it was not. So regardless of the thing that we're charting, if there's supply and demand involved, if there are humans with our bag of bones here that are also housing so many emotions, if people are involved in that supply and demand, and they're a readable force there because we can chart it and we can see that repetition, there's a way to make money from it.
Okay. We talk about the impact of neuropsychology on trading decisions. And again, quoting many, professionals in the past, they talk about when the masses are selling, you should be buying, and when everyone's buying, you should be selling. So in terms of the neuropsychology of trading decisions, maybe elaborate on that a little bit for us.
Yes. So the idea with neuropsychology is that we are very much subject to what our brains tell us. So we have got so many inherent biases. I'll give you one right now, Con, that I'll bet that a lot of people have experienced. It is a way of making sure that we feel like our ego is intact. And that is confirmation bias. So if we own a little share, let's call it Rio, and onto the news comes, well, Ria's not going too well today. We will go, well, it's because they don't know what I know. And you look for evidence confirming your view of your share. And because you happen to own it, of course, that share has to go up. So that confirmation bias is just one of many, but it is definitely a way that we can be aware how our brain is working so that we can circumvent the issues. I'll give you one that everybody can apply today. And this goes from an elite performance level, whether you are lifting a weight or whether you are looking to trade effectively. What you can do is you can have a short mantra or a one-word mantra. So I went to the gym before our chat, Con. It was fantastic. I did some squats at the gym. And before I did that first squat, I said to myself, strong. That was my word that I used today. So that implants that, yes, this is going to be a pure lift. I'm going to be able to lift this weight and I'm going to do it effectively, all into the one little word. Share traders can do the same. So the one word that I often use, and you can steal it next time you're trading, is consistent. I want to be consistent following my trading plan. I want to get consistent results. And I want to make sure that everything that I'm doing is pure and logical and defined rather than flying off the handle and going on gut feel and the way that people think traders react. We really do not. The ones that are effective and that are making money, more logical and more detached and less emotional than perhaps you'd first think.
I love the word you just used, detached. And not to the extent that you do, but certainly in the courses that I run, public speaking and communication, I talk about detachment from certain things. And it's really important to go, okay, well, this is what I'm doing. This is a process. I need to basically remove myself from it to not be emotionally involved and then be making decisions or confirmation bias on my emotions. So I love that word. I love that word, detachment. So somebody contacts you and says, hey, I've seen your content, love it. It's something I want to get involved in. I want to create, whether it's an additional source of revenue or it's something that I want, to provide some freedom or whatever their goal is. How does one start? Take us through the process in terms of time commitment, financial commitment, and not financial commitment for you, but financial commitment in terms of what's a realistic amount to involve or put into the market to get a return that is going to have some element of impact.
I like this because what you're looking at is that beginner's mind,
Yes.
that Shoshin from the Japanese philosophy, where you're looking to what are all of the basics that I need to cover in order to get a result. Now, as a beginner, I always suggest people have to say, am I interested in following this or not? Because if you're not, if you have no interest in creating a different lifestyle for yourself or the beauty of money coming into your account, or perhaps you're not really keen on developing something on the side of what you've already got going, walk away. There's no problem in walking away from this because it doesn't mean that you have to do this. You probably have other sources of revenue, other sources of being able to create money for the long term. So firstly, work out whether you are decisively wanting to follow this. And
Mm.
if you are, firstly start with some books. So the books I'd suggest would be perhaps my books, Trading Secrets and Charting Secrets. And another good one is The Art of Trading by my business partner, Chris Tate. Now, those books will give you those basic core building blocks of entry, exit, and position sizing. Those really are the key areas. And then making sure that you've got a written trading plan. That is the very beginning step. Commit to paper the way you'll approach the markets. And then how to progress from there. So you've got some information. Yes, you're interested, and yes, you're determined, and you have in mind that this could be a way that you can create some extra income or perhaps some wealth for the future. So then the next step is to start in a very small way. So start with paper trading. Just track a few shares that you're interested in and write down on paper whether you'd buy them or sell them. Look at charts, see what is up, see what is down. See if you can start defining on a chart things like support and resistance lines. Have a bit of a play. As adults, we forget how to play. This is actually really fun. Like, I just find this to be the creative part of trading, because being able to analyze information and produce an outcome is just so much fun. So just allow yourself some time to develop those skills. Then you can actually get a broker platform or a way of being able to transact with the market so that you can actually put money into a trade. So you could use something like CommSec, any of them really. They've all got platforms, these banks, don't they?
Yeah.
So any of those big bank ones. I use Self-Wealth, but you don't have to. You could use any of the ones that are available. They're all fairly much of a muchness. And just start with a very small amount and allow yourself that learning time. So important that we give ourselves time to grow. Your first year, if you can actually break even, terrific. That's what you're after. That is the goal of every trader in their first year, just to come out even with everything that you've put in. You want to come out with the same amount. Then after 3 to 5 years, then you'll start to really know who you are as a trader. So for me, it took 5 years to be able to leave my corporate role. I didn't have the right books. I didn't know what I was doing. It was back in the 90s. So I do think there's so many shortcuts now, so many additional things that you can do to speed up and propel you into full-time trading if that's what you want to do. But make sure you find a mentor, somebody who cares for you, somebody who gives you the right information and who has been down that path before, someone who can actually guide you into being the best trader that you can be. Now, the other part of your question, how much money to put into the market? Look, a lot of people start with $10,000, $15,000, which is much less than you need to purchase a house. And so I suggest that if you have anything less than that, continue to save, because saving is something from a finance point of view we all need to become better at. And if you've got much more than that, good, because really the people that do very, very well are the ones who have that discipline, who can stay loyal to a trading plan, and who can fixate on a goal and an outcome that they're trying to achieve, Con.
I love the plan, and it said fail to plan, plan to fail. And that's not only relevant in trading, but indeed in any aspect of business. We need to make sure that we have a plan that we need to follow and make sure that there's guidelines there. So I really, really appreciate that one. Louise, I could talk to you for hours, but I won't, because I know you're a very busy lady. Normally I ask my guests for their 3 top tips. Is that something that you'd like to share with us to close off with?
Yes, absolutely. Tip number 1 is keep listening to Con. Con has his heart in the right place. Everything that you are doing, Con, is beautiful. I know we're coming at it from different angles here. I'm talking about the discipline required to be a trader. You're talking about, from a public speaking point of view, the discipline required to excel. But everybody, you need to listen to every single word this man has to say.
And I'd just like to plug in here that this is not a paid announcement from Louise. I had nothing to do with this. Louise,
Beautiful, man.
as they say, the check's in the post. Okay, listen to number one. Listen to Con. Okay, number two.
Number two is be careful who you associate with. Now, this is so important. My mutual friend with you, Con, is Rick Schnabel. Rick and I, as well as many other people, are in my inner circle of people that I can relate with, that I can draw mentorship from, and that I can learn from. You become like the people that you associate with. So if you want to upgrade your life, upgrade who you're listening to and who you're hanging out with. I think that is a real key. And probably number three would be financially, do a self-assessment. Where are you at in your life financially? Are you happy with the money that you have coming into your household, into your account? And if you're not, work out what you're going to do about it. So many people leave it too late, and before you know it, they're living a retirement that they did not plan for. So do a financial self-assessment now. And if you're struggling and if you want some help with trading, please, I would love to be in your corner. This is what I love to do. You know, the share market does not give me my people kicks. Doing things like this with you, Con, and helping my traders achieve in the markets, that is where I really get my kicks. So come and visit me at tradinggame.com.au. Download your free trading plan template and my Trading Made Simple e-course, and that'll get you started. And definitely send me an email. I'd love to help you in the markets and achieve what you want to achieve. So that would be my three pieces of advice. And Con, I'm looking to get people involved listening to you a bit more too. Now, my podcast is talkingtrading.com.au. And at Talking Trading, I interview people. I find things that interest me because I like to pull on a thread and follow it. Now, Con, you have been one of these little threads that I'm looking to follow. How can people get in touch with you and what can they learn from you?
Well, my website is www.conkoutsikas, as in my name.com. And what am I? I'm a professional speaking and communication trainer and coach, and I help people improve their speaking and communication skills. And again, folks, that was not planned. Louise has really put me in the spot on that one. But yes, and I know you're going to share this with your audience, Louise, and as I said to you earlier, extremely grateful for that. It's certainly not something that I look for or I ask for, but the fact that you've offered is you're a wonderful human being. And because I don't want people to think that this is a gratuitous plug Con segment, give me a fourth thing, because I don't know that my ego or my awareness will allow me to go, number one, listen to Con. So give me one more. We've got careful who you associate with, self-assessment, and one more.
Find an unreasonable friend. Find somebody who can name it as they see it, warts and all, that can give you information about yourself that is perhaps not within your realm to have initially realized. You want someone who can shine a light into your blind spot. And that is such a key. So often before I make a major life decision, I've got my little boardroom of people in my mind. I've got a few people that I call on, and I'll ask for their thoughts. And that critical view, that non-fluff view, has really helped me move ahead, particularly when I've had a big decision to make. They're one of those decisions that can actually change the trajectory of your life.
Yeah.
I think finding that unreasonable friend is so important.
Do you know what? I've never heard somebody say that. I love that. I mean, the self-assessment, anything we do, we need to have a level of, if we're not aware of it, and I think I got it from Rick, we have to make the unconscious conscious before we can change it. And so the self-assessment and the self-awareness is huge. Ladies and gentlemen, my name is Con. I am the conversationalist, and my guest today has been Australia's most compelling speaker on the share market, Louise Bedford. My name's Con, and until next time, bye for now.
Louise Bedford here, the host of the Talking Trading podcast. I am very excited to say that I'm going to be presenting on August 27, 28 and 29 at the Finance Magnates Pacific Summit, and right now I am joined by Eamon Sheridan and Justin Lowe. Guys, welcome to the show. I'm so excited to hear about your presentations. I know that you're from Forex Live. Eamon, what are you going to be presenting about at the Finance Magnates Pacific Summit?
Justin and I are from Forex Live, as you said, 24-hour, 5-day-a-week news and information on financial markets. So get involved if you're not already. And what am I going to be presenting on? I'm going to make it a bit of a personal presentation from me. I want to hit 5 things that I've learned that I think are really, really valuable. I think by the end of the presentation, you're probably going to hate me because I'm going to say some things that you might not want to hear, like maybe learn to code a little bit, because that can be really, really helpful when you're trading and you want to see something specific. You can see it really easily if you know a little bit of code for whatever platform you're using. And I'll be covering some other things, some freebies, where to get free stuff, how to do stuff without overloading your brain so you can focus on the markets. And yeah, a bit of a personal approach, Louise.
Oh, magic. And Justin, what will you be presenting on?
Well, I'm a big lover of sports in general, and the recent European Championships has inspired me to share about how one can approach trading in financial markets from the aspect of actually playing a sport. It's something similar in that sense. So when you play football or any sport for that matter, there's no one strategy that helps you win every game. And the reality of it is that you can't win every single game you play. So, Roger Federer recently talked about he wins 80% of his matches, but he barely wins half the amount of points that he actually plays in a game. And for me, it's the same thing with trading. And the sooner any trader realizes that and accepts the fact that you have to be flexible, you have to adapt to markets, you have to stay nimble, and you also have to best utilize the tools you have at your disposal, only then I think you can start to adopt a better mindset when you approach trading in markets. People in general outside of markets, they always tell you trading is so difficult, it's so complicated, it's too much for me, and they don't want to get involved. By sharing on how to approach it with a different mindset, especially from just picking up a hobby or playing sports, that people will find it not as daunting.
Yeah, I love it. Look, when I first heard about this summit, I thought the tickets would be $15,000 a head. It sounds so fantastic. Do you know they are actually free, and you can get involved by going to events.financemagnates.com. I'm going to be presenting on Investing Psychology Secrets. That's the title of my new book. I'm going to give you some of the surefire strategies that you need to excel in the markets. And I'm also presenting with Chris Tate, my business partner, on essential lessons that we have learned through 50 years of teaching traders. Chris Tate started out as a floor trader way back when. I personally have been trading since 1990, and I'm a best-selling author. So I'm so looking forward to conveying those incredible lessons to everybody in the audience. It's a way that you can meet us all in person. Enough of this online BS. We are going to be there shaking people's hands. So come to events.financemagnates.com. It's a Sydney-based event, August 27th through to the 29th. You're going to want to be there. Great chatting with you guys.
Thanks so much, Louise.
Thanks.